Welcome to Markets Now. I'm Michelle Rook with Ken Beadle with Paradigm Futures. We're seeing mostly higher prices as we roll through the mid-session with a few exceptions in the wheat market. But Kent, let's start off talking about soybeans, which have been the price leader today. And of course, we're still trading South American weather, but also, this market is kind of watching this meeting between President Biden and President Xi with a lot of hopeful ideas, aren't they?
I think they are. I mean, it just feels like there's been a bit of a thaw in the relation between the U.S. and China, whether it's this meeting or whether it's the meeting that Treasury Secretary Yellen had last week. There just seems to be an effort on both sides to maybe soften the rhetoric a little bit, to maybe try to find some common ground on trade. And, clearly, over the last 3 weeks, we've sold a lot of soybeans to the Chinese. We did the frame contracts, and certainly maybe some of last week's business was some of those frame contracts actually getting executed and priced. But if there is a meeting and trade is going to be discussed by the two leaders of these two countries, you have to think that one of China's first chips that they may choose to play would be a willingness to buy some additional U.S. beans, because it certainly does act as though they might need them.
Yeah, especially if they're keeping an eye on what's going on with South American weather, because they're behind on planting in both the case of soybeans and even corn, aren't they?
Yeah, they are. A report I saw this morning suggested about 14 percentage points behind, and that pace has been slowing over the last 3 weeks. Mato Grosso is maybe pushing up toward 80%, but the acres that have been planted, may need to be replanted. It's been very, very dry. Emergence has been poor. Pictures out of that region certainly show some soybeans that are very small and under an awful lot of stress. And we're hearing about temperatures in parts of Brazil and parts of that part of the country, southern Mato Grosso do Sul, that are in excess of 100 degrees, maybe as high as 104 or 105. That's just not a good start. And it means that, even if they do get rain and even if we have replant, things are going to be late. We're not off to a great start, and yields may be impacted. Certainly, if it doesn't rain, yields are going to be impacted. And it's also impacting corn, too, for that matter, because safrinha corn is going to go in late this year.
Yeah, but at the same time, we have not been able on the January contract to take out the $14 level. Do we have to have a few bigger problems or just get a little bit farther down the road before we can do that?
Well, I think, there's an awful lot of folks in the trade who are making the correct, observation that it is very early. When is our yield made in soybeans? Well, typically it's, in our, the analogous of our month of August. So that's going to be, January, February, in that time frame down there. So we've got a ways to go, and certainly things could get better. The problem is that the weather pattern itself just doesn't seem to be changing. And we've had a series of model runs where you get promise of some rain out in that 8 to 14 day time frame, but then the 1 to 7 day time frame continues to be dry, and the clock keeps running, and so that rain continues to get pushed out. And the question is, are we really ever going to get it? And if we don't get it, as the clock ticks and as the calendar passes, it's going to be very critical. Basically, we need to see this rain here in the next week or two.
So, Kent, when does the corn market start recognizing that? Because so far it doesn't feel like corn's put in any South American weather premium. We made new lows for the move again here this morning before finally bouncing. So is that market just following soybeans, or, I know we did get a little bit of Mexican export business as well.
Yeah, well, we've been getting Mexican export business on a pretty regular basis, and we had another nice chunk here today. I think that people do realize that this is a corn issue. But I do think that the traders most of last week were trying to position for what they assumed was going to be a bearish production report. They got that production report, and they pressed it a little bit even on Friday, making new lows, and they were pressing it here as markets opened up. But as the soybean market started to gain momentum and people realized and took another look at the models and saw that the weather still doesn't look like it's getting better. I think that the large speculative short position that we have in the corn just started to get uncomfortable. And so, I think we're getting a good short covering rally here today. I suspect that tonight, tomorrow, you're going to see open interest down pretty good because this definitely feels like short covering in corn today.
Yeah, well, let's hope that the fresh lows that we had kind of stick here. It would help if we would get wheat to quit going down. And today, wheat is kind of a reluctant follower, but still, what is having problems with weak demand, or what's continuing to underpin that market?
Yeah, well, I mean, in one word, I think the answer is Russia and
Yeah,
the
like I said, poor demand.
assumption of Russian supply, or translate that into poor U.S. demand. Our export inspections today over a little over 200,000 tons is still not a very good weekly total. We'd love to see something in the 300,000, 400,000, 500,000 ton area for wheat, and we just haven't had it now for such a long time. We're way behind in export sales in wheat. And it was actually surprising last week that the USDA did not lower export demand on the balance sheet. So we still have the potential for a higher ending stocks number and lower exports unless exports start to kick in and start to move higher. And we just haven't seen it happen yet.
Yeah, like I said, the wheat market, when the only positive thing that you can say is that we're oversold and at times see short covering, that's pretty bad. Cattle market, we made new lows for the move. And we've had, I think, a $23 correction in the February live cattle contract off of its high to the recent low. Are we done going down? Are we trying to bottom?
Well, we may be trying to bottom, but we generally don't make V bottoms. Generally, we make rounded bottoms. I actually think that we're going to find some sellers on this first rally in cattle. I don't think we've fully liquidated out the longs yet. I do think that there are end users in cattle, price sensitive buyers that are taking a look at last week's price action, knowing that the inventories are still below normal and thinking, well, maybe this might be a good place to start to get some things priced. And so that's given us a little bit of strength here today. I think we got a little help from hogs being stronger and just help from overall. All commodity markets were a little stronger today. The crude oil market was stronger. Of course, the stock market turned around a little bit this morning as well. And so a lot of reasons maybe for a small cattle rally, but I'm not sure that we've made the lows yet.
And your thoughts about cash trade this week? Because it was disappointing last week. I think mostly 180 to 181 in the South.
Yeah, I would be expecting steady at best, but probably lower cash trade this week would be my assumption. Yeah.
And as cattle were coming down, it felt like hogs were going up, and maybe that was a function of those cattle hog spreads. So now where do hogs go?
Well, we certainly had some liquidation of the cattle hog spreads. There's no doubt about that. But we also had a CME pork index last week, hog index that actually closed the week 3 cents higher. So the pace of seasonal declines in the hogs has been slowed a little bit. We had fairly good cutout activity again last week in the pork, and I think that helped us out a little bit. I do think that seasonality in hogs is probably going to kick back in, adding to the rally here today. I'd be inclined to be thinking that we may want to sell that. I'm not sure that we're going to be able to get this market to move a whole heck of a lot higher. One caveat to that, the Chinese might be interested in some pork, and in addition to soybeans, if they wanted to buy pork, that could be a big change in our marketplace.
Yeah, and China hopes might be part of the rally today, as you point out there.
Yeah,
We'll see if we can keep
exactly.
going because technically we've gotten just above like these 50% retracement levels. So we're going to need a little bit more gas in the tank to keep going, aren't we?
Yeah, we are. Of course, I tend to think of a window, so anywhere from 38 to 62% on a
Okay.
retracement is what you expect, and so we can run a little bit further here. Yeah.
All right. Thanks for joining us as always. Can't beat it with Paradigm Futures. That is Markets Now.